Hi viewers, in this video we are presenting calculation of provisions for the point of JO. These provisions are classified or divided into two types. One is provision for bad debt and doubtful debts, and second one is provision for discount on debtors and creditors. So the first point is provision for bad and doubtful debts. In the business concern, sales will be made on credit sales. Sometimes some of the amounts might not have been realized by the end of the year and so would appear as sundry debtors. These debtors may not repay the whole amount due to loss in the business or insolvency. Out of the whole amount, a part of it is recovered or realized, and that the remaining part may be considered as bad debt. The actual amount of bad debts may be ascertained either by scrutinizing the case of individual debtor, or the same may be calculated on the basis of a certain percentage on total debtors. It is charged to profit and loss account. The provision for bad debts in meant to meet a possible loss, and the amount of the total loss is uncertain. These two characteristics indicates the nature of provision. It is the nature of a loss that it has to be debited to profit and loss account. Otherwise, the amount of the profit will be inflated. Generally, it is calculated on the certain percentage of total doubtful debts after adjustments of the bad debts, if any. It is practically a loss of the current year which is actually written off in the next year. The provision is created by reducing the profit of the current year by debiting profit and loss account. For provision bad and doubtful debts, accounting treatment are the journal entries for the calculation of provision. First entry is for ascertaining a provision for doubtful debts account. Profit and loss account debtor to provision for doubtful debts account, being the provision for doubtful debts. Second one, when a bad debts occur, bad debts account debtor to concerned debtors account, being bad debts written off. Third one is when bad debt account balance is transferred to the provision account. Provision for doubtful debts account debtor to bad debts account, being bad debts written off against the provision. And fourth final one is when the surplus amount available in the provision account. Provision for doubtful debts account debtor to profit and loss account, being the surplus amount credited balance to profit and loss account. All the best.